limited control over healthcare costs and economic changes, employee health factors, limited options in the insurance market, regulatory compliance, benefits expectations, administrative complexity, resistance to change. These are just some of the reasons why it is so challenging for employers to actively reduce their healthcare premium. My name is Dylan Jenkins, and I help employers better educate their employees on how to be the best possible consumer of their health insurance plan in this very confusing world of health insurance by getting the same services that they need, just at the lowest out-of-pocket cost possible. If you're an employer that is extremely frustrated with what feels like the never-ending increase your plan gets year after year, I guarantee you my team and I have a solution that can help, some of which actually have nothing to do with changing the plan that you currently offer. That being said, let's jump into today's video. All right, let's start with number one here. Limited control over healthcare costs and economic changes. Things like prescription medication, it's a very big one for a lot of my clients, medical inflation as it pertains to technology advancement, and cost of medical procedures. So for those of us that watch television, we probably have seen a lot of different drug commercials. The one I'm going to pick on is maybe Humira or Skyrizi. Both of those drugs cost anywhere from $9,000 to $20,000 a month for those medications. Now, I'm not saying if you're taking those medications, shame on you. If you need them, absolutely. But what I'm saying is the cost for those, when you swipe your insurance card and you only pay your tier 3 or your tier 4 or specialty drug copay, or it might be $75, or it might be a co-insurance split of a couple $100, the value in which you're getting is insane. Things like childhood blindness and gene therapy. Gene therapy is a very big topic right now. But they're saying they can cure childhood blindness. Now, I'm not saying they're able to clear it completely up, but allowing the child to see things like light and colors costs millions of dollars per dose. But where are these things being paid for? And it's in our insurance premiums. Second thing is medical inflation pertaining to technology. Things like MRI machines, CT scanners, 3D printers, robotic surgical systems, and all of which are for the greater good of society. But again, these are being paid for through our insurance premiums. Last bit here, cost of medical procedures. Best example I can give is the cost of having a baby. My wife and I actually just had a baby this past June, and the cost of her, if we did not have insurance, was over $34,000. Just out of curiosity, I looked up what the cost would have been back in 2010, and it was actually less than $10,000. This is, of course, if there's no complications, which thank God there was not for us. Knock on wood for the future. But again, this is more than 3 times what it was back in 2010. Where do these increases come from in terms of our premium? It's through medical procedures. There's dozens of other procedures that have also had that same variance in terms of increase as well. All right, number 2, employee health factors. So I hate to say this, but the health status of your employees significantly impacts your group health plan's premium at renewal time. So if your employee does have a pre-existing condition or is leading an unhealthy lifestyle, they're going to be a higher utilizer on your group's plan. And if you're an ALE, an apt large employer, where you have more than 50 full-time equivalent employees, or you're on a level-funded plan or self-funded plan in a health consortium or a health captive, all of these, the claims your employees are incurring will have an impact at renewal time for your plan to increase in premium. So some ways that we can combat that is by incentivizing those folks to change their course of action as it pertains to their physical or mental health. That can obviously be met with some objections and resistance along the way, some of which we'll talk about later in the video, but the best way we could do this is through wellness programs. Number 3, limited options in the insurance market. So if you're an employer, again, you're an ALE, an apt large employer with 50 or more employees, or you're level funded, self-funded, etc., where your employees' claims are impacting your renewal. If you have a couple high health claimants that are driving your healthcare cost and leading to the increased premium, where you're getting 20-30% increases or more, other carrier options do reserve the right to decline to quote your group, leaving you with the decision of either eating the increase or significantly increasing your plan's deductible at the hopes to offset that premium increase, or look for alternative options. Now, the ICHRA standing for Individual Coverage Health Reimbursement Arrangement, has been a saving grace of sorts for some of my employers. One of my employers received a 59% increase, which would have taken their spend from 1.2 million to 1.8 million. By putting the ICHRA in place, we actually brought their spend below 800,000. So there are methods out there that can help. It's just a matter of if your agent is well versed in what those alternative funding solutions might be. Number 4, regulatory compliance. So there are various makeups of businesses, whether you're a sole owner or you have a multitude of people running things and everything in between. You have to stay in compliance for things like, is your plan affordable? Meaning, does your plan meet the minimum guidelines for what you cannot charge more than for your employee to elect health coverage through your organization? You have family medical leave, COBRA, ACA reporting. Again, if you're over 50 full-time equivalent employees, RxDC reporting. I mean, the list goes on and on. You as an employer can outsource this risk to either a payroll company or partner with a brokerage firm that does have in-house compliance officers to shine light on these regulations and best practices for managing your benefits. If you go the broker route, usually this comes with either a small price for some of those services or as a complimentary benefit for being a client. At least with myself and my team, all of those services, or the majority of them, are free for us to do for you. Number 5, benefit expectations. So it's no secret that job seekers are expecting top of the line coverage nowadays. And we're not just talking about medical insurance. It's most of, if not all, ancillary lines under the sun, that being dental, vision, short-term disability, long-term disability, life insurance. And those are just the popular ones, right? We also get as granular as accident coverage, critical illness, hospital indemnity, maternity and paternity leave policies. I mean, the list goes on and on. So this leads to employers feeling compelled to offer extensive coverage options and increase contributions so that they're very little cost to the employee, all in an effort to stay competitive in the marketplace. Number 6, administrative complexity. Health insurance renewals can be very time consuming if you're doing it alone, and very frustrating. That might be the understatement of the year. I think after tax season, this might be one of the most annoying times of year for employers. But if you are an employer that has over 50 employees or on a level funded plan or self-funded plan or have an HRA, that being a health reimbursement arrangement, you should be working with an advisor group that's looking at your utilization reports so that when your renewal comes in, and if your group is running hot, you'll be able to tell that many months in advance, so that there's not so much sticker shock if you do get a high increase in terms of your premium. And aside from that, your broker should be bringing strategies to the table, and yes, that's plural, for you to consider, all in an effort to help mitigate that renewal with the least amount of network disruption, if any, at all. Number 7, resistance to change. And I think this is the biggest one on the list. The first thing I want to say is change is very tough. Sometimes employees don't understand that we don't like to make changes just to get folks excited. Sometimes it's the most sustainable option to keep the lights on and folks employed. I think the best way to do this, if you're forced into a carrier change as an employer, is with transparency. Let your employees know what the premium increase was. I think it's in people's DNA and nature to be sympathetic. And if you're a strong leader that your employees will go to battle for, or show up every day, they'll understand and appreciate your decision-making ability. Maybe it's not a right way, and maybe it's not everybody. But I think that is one of the prices of being a leader. Number 8, and the last one on our list here, is long-term investments. So the one question I ask folks all the time is, how often are you educating your employees on being the best possible consumers they can be in this very confusing world of health insurance? And the responses I get more times than not is, we do it once a year at renewal time. And it's a pretty ignorant thought to think that, one to 2 hour meeting where you're talking about all the plans that you offer, what the deductibles are or differences are, co-payments, co-insurance splits, out-of-pocket maximums, hospital listing differences, all of that jam-packed into one meeting once a year is a little crazy to think that, anybody would be, well equipped to make decisions as it pertains to their health insurance. The best way I combat this is with monthly education sessions where, I'm doing things like bringing in either a 2 to 3 slide PowerPoint, going through things like, transparency pricing tools, depending who your carrier is, what are the cost differences for MRIs, blood work, x-rays, emergency room versus urgent care, prescription drug saving methods, which we'll talk about in a later video, all of these things. But the best place to start is actually with a wellness and preventative care initiative program. So if you currently don't have something like that, I think that's a great place to start, and I think that's going to yield the best results for you in making sure that from an accountability standpoint, you are tracking those things over a quarterly basis. Again, great place to start. Even if you're not an ALE, an applicant large employer, and you're under 50 employees, planting these seeds early will definitely yield greater results. And if you are an ALE or well over 50 employees, planting these seeds eventually, better than never, will lead to lower premium increases. So in closing, the best way to reduce your group health plan's premium is with a multitude of factors. Number 1 would be your health plan dynamics. Number 2 would be your strategic plan and their alternatives and decision making. Number 3, and my personal favorite, would be proactively managing your employees' education and health. If you found this video helpful, I challenge you to share it with a friend. My team and I would be happy to talk through any challenges where you might feel stuck or all out of options. We are here to help you. My name's Dylan Jenkins, and I look forward to seeing you guys in the next Benefits Pulse video. Take care.